What's up, everybody? Hope you guys are having a good day today. I'm driving home from the gym right now, so I'm looking not the best right now, so I hope you'll bear with me. But I just wanted to hop in and pop a video real quick because of all the information we've had over the past weekends, flip-flopping on the Iran war, and I was very interested to see how the stock market was going to open this morning. I was hoping that it was going to be a really bloody day in the market and I was going to pick up some stocks I've been looking at, but it's not actually. Oil is only up about 2% right now, and stocks broadly are up. The futures were up about 1% this morning, which I was surprised about, and stocks broadly are up, and the S&P 500 is up. So I think the main story to grab from this is that the stock market doesn't care about what's happening in Iran anymore. The stock market only cares about what truly matters, which is what's mattered for the past couple of years, which is the same 7 companies that are still passing money around to each other. And until that beat stops, it's going to be business as usual. We just saw Micron's earnings. The stock popped 17%. Everybody that's calling for this AI bubble that's going to pop miraculously tomorrow, it's not going to happen. And everybody that is posting all of these hype-based videos about the stock market is going to crash, blah, 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 they are waiting and picking and choosing for something that in my mind is going to happen probably about 6 years down the road, because this cycle is nowhere close to being over. First of all, you still have the Trump presidency. Donald Trump is not going to let the stock market go down. Second of all, the U.S. economy is still pumping trillions and trillions of dollars into the economy every single year. As long as that keeps happening, nothing about the stock market is going to change. There's a couple of really good graphs, and I'm sure you could find them if you look at them, but just Google one share of S&P 500 to 1 ounce of gold. And what that will show you is that relative to what, say 1 ounce of gold and 1 share of the S&P 500, the S&P 500 relative to that 1 ounce of gold has become dramatically more expensive to buy. The S&P 500 compared to gold, if I'm explaining this correctly and you're understanding me, the amount of gold you could buy compared to the S&P 500, you could buy significantly more gold than you can buy to the S&P 500. And the reason for that is because that the S&P 500 is way more limited than the share of gold. And this can be proven by how scarce it is. Because the more limited the resource will get, the more expensive it will become, which is exactly what you'll see if you see the chart. You see gold pretty much per share of S&P 500 stay relatively flat. It increases, but it stays relatively flat. And the S&P 500 chart just absolutely skyrockets because it shows that it's actually way more scarce than gold. And the main point of this is if you want to get ahead in this economy, I'm not saying you're going to be a billionaire. I'm not saying that you're going to not work a job anymore, but you have to save your money. It doesn't matter if you make $1 million a year. If you make $1 million a year and you spend $2 million a year, you're broke. It's simple, okay? It's not that hard to understand. You have to live below your means, and you cannot spend all of your money. Every single month that you're maxing out your paycheck and you're maxing out your credit cards, all you're doing is you're borrowing from your future self. That's all you're doing. And the next thing you have to do is you have to own assets. And the easiest asset to own is the S&P 500. The reason the S&P 500 is the best asset to own, if you don't want to worry about it, you don't want to look at it, you want to put money in it, and you never want to think about it again, is because you have the smartest minds in the world. You have all of these hedge funds, you have all of these finance guys that work on Wall Street, all of these people in Tokyo, all of these people in London, that all they do is look at companies. And the S&P 500 is the 500 largest companies, the 500 best companies in the world. And all these guys do is look at these companies all day and rate them and understand where their stock will be next quarter. Where's their cash flow going to be? So if you think about it, the S&P 500 is almost like the aggregate of all of the stock market information. So if you buy the S&P 500, you're essentially buying the world's knowledge base of equities that you can buy, if that makes any sense. So I just wanted to come in here and just say that don't pay attention to Iran. Don't pay attention to Ukraine. Obviously, when those things end, it will be better for the economy, but the U.S. economy is the largest economy in the world. The U.S. economy is the only economy that matters besides China, pretty much. Tokyo matters a little bit. Japan matters a little bit, okay? That's pretty much it. And U.S. companies are the ones that drive international growth. That's what you need to understand. The U.S. is the place to invest. U.S. companies drive international growth. And if you want to buy a broad index of that, you can buy the S&P 500. And you need to buy assets long term. Don't panic sell. Don't panic sell, and you'll be okay. It's that simple. Dollar cost average into the market. Live below your means, and have a great day, everybody.